Hey guys, today is Sunday, September 20th, 2020. Let's take a look at the market. The futures are in session right now. And as you can see, we have basically on September 18th, we were consolidating below this particular line. I've been talking about that. We had an overextension, we had a overreaction, and then I was expecting for the market to bounce around and eventually get back to this band of this range band here, and so for further upside. But unfortunately, that didn't happen. Right when the price was hovering, dipped below this red line here, I became very cautious. If you're just looking at the chart by itself, it looks like when we were here, it looks like it has found the support, but that is absolutely not correct way of looking at this chart, because the overall trend is upwards, right? So despite the price has found a support here, what happened is in the actual reality in this upward trend, this price is actually making a lower low. This is actually very bearish when I was looking at this, and when it was consolidating here on September 17th and September 18th, it started dipping down, and now we are basically made a official lower low here, and I think that is a sign of significant weakness, and I think this market could be continuing this weakness for at least the next week or two. And so right now, if you're long, you have to be very cautious about your positions. And if you have not liquidated your positions, if you're a long-term holder, you should. I don't really know what to do. If you're a long-term holder, I don't think this dip is gonna be, it's not gonna be a crash like this. So eventually we're gonna bounce back, but in the interim, you're gonna be experiencing some pain. That is for certain. I think that the chance of that is going to be very high. I think this dip is going to be much more severe than a regular kind of pullback. So right now we have pulled back from the top in Nasdaq by almost 13%. And if we look at the historical average of a steeper pullback, we can basically estimate how much it could potentially, go down to. So right now it's a 13% pullback, and we're still going down. So here is a 23% pullback, right? Let's go back further in history. How about this one in December 2015? And this one in particular is a 17% pullback. Let me see about the August 16. 2011, where it's a Eurozone crisis. I think that was about here. And what was that percentage here? This is 17-18% pullback. So we should definitely looking for a 17 to 23% range in this particular pullback from top to bottom. So we're talking about 17% is here. That's something I should mark, which is not that far from here. So that is one level we should watch, 17%. It seems that could be a magic number. And another one would be the 23%, 24% pullback. And so let's just figure out what the 24% is, right? So 24% would be more steep. So we would be able to get to this particular point, which is slightly below the previous high that was achieved on February 20th, 2020. So it's possible that we're going to go down that much to retest this particular level. And it's very logical as well. So we could retest down to this level, or we could just, we could just price goes down here to set a 17% level. Where are we gonna go? We have no idea. I'm literally have no clue how far this can go. Whenever the market starts to correct. But this correction looks to be much quicker than even this particular move, which was very steep, was 24%. So I expect this correction to even complete by the end of October. So by the end of when is the election? Election probably mid-November, so it could last until mid-November, right? Totally likely last until mid-November, then start bouncing, or it could even bounce before that, because in the last election in 2016, what happened was the stock market bounce, start going up on the night of that election, right? And I think for this time, the stock market could be rallying even before the election, because the chance of black swan there's no black swan kind of election results, right? For example, even Biden wins, it's not a black swan, right? It's not like the Trump has has beaten Hillary back in 2016. That was unexpected by the mainstream media. To be fair, I absolutely expected it. I actually bet in favor of Trump, and actually made quite a lot of money that night when Trump actually won, because the VIX all went up dramatically overnight, and I actually made a lot of money that night, and in 2016. So I had a correct bet, but the general consensus was Hillary was going to win with a high probability, and obviously that consensus was incorrect. And for this election, whether Trump wins or Biden wins is not, either results are not a black swan event. They are, Trump wins, continuation, business as usual. He's going to get another 4 years. A lot of people expect that too. Biden wins, new president who's probably less crazy than Trump. And less black swan. This is not a black swan result. Even Biden wins. So I think the market could go up before the election. So market could, not before the election, could turn around. I'm gonna write it down. Before election result. This time, due to lack of black swan scenario. Okay, so that could be the case. So because the market is forward-looking, and that could be something that's potentially could happen. Okay, so today let's take a look at the ES as well before I'm taking to the next topic, which is the name of this video. I'm going to talk about SPACs. So E-mini 500 is less, obviously correctly less than NASDAQ, but pretty much the same shape right now. We have gone below, this band, this range, and we are into a correction territory for sure. Okay. All right. So let's take a look at my topic is SPACs. Okay. We are in a very, very high, still in a very high level in the market in general. We are at, close to all-time high in NASDAQ. Lots of stocks are in, close to all-time high, even after the recent correction. And I think after this correction, and it's going to rally even further to the end of this year. So let's take a look at the November 2016. You can see that was the day of election. I remember this point vividly because the market dipped so much overnight, then recovered the very next day. So then after the election, it was a Trump trade. The market continued to make new highs. So we could have a V-shaped recovery again after the election. And I think this market craziness is not over yet due to this huge amount of liquidity in the public market. And interest rates at all-time low. Okay, the margin rate is just extremely low. There are still a lot of firepower that's left in the public investors. And so I think this market could continue to exhibit a level of strength that like we've never seen before, except the dot-com bubble. So the reason that these SPACs are coming out, the SPAC stands for Special Purpose Acquisition Vehicles, acquisition companies. These are blank check companies that are formed on the stock market that are listed on the exchanges. So what are the blank check companies? Basically, it's a company, it's just a shell, right? It doesn't have a business purpose. It doesn't have an operation. It's just a fund. It's a pure, just a pile of money. So you have a legal entity, a legal company that is registered on the stock market that has shares, but it basically just have a pile of cash on the balance sheet, doesn't have any business operation, doesn't have any revenues, doesn't have any profit. It's just pile of cash. And their only purpose is to merge with another company that is private, so they can take the private company to public. By merging with that company, essentially the pile of cash in the SPAC fund, is being transferred to the new company, right? Because you're buying the company's shares with that fund. It is essentially the investor of SPAC now become the new owner of the company that they're merged with. And by the reason, okay, so all that is pretty straightforward, simple model, right? Raise funds from public market, then find a company to merge with. And the reason that they do this, the company would go with SPAC than going with traditional IPO, is that SPAC is able to shorten the IPO time frame by probably a year, right? So the modern IPO has a lot of elements, finding underwriter, determine the valuation, auditing, making sure you go on roadshows, talking to investors. And during the COVID era, roadshows are very, very difficult to do, right? Because doing roadshows over Zoom is not the same as doing roadshows, presenting in front of a physical audience, being physically present in a room. And roadshow is actually not that easy these days, doing Zoom calls to present your roadshows. So what happened here is that SPAC is actually much easier to do because you are simply presenting to the SPAC owners, right? You're presenting to a SPAC, board. So you're presenting to one investor. You just have to pitch your idea to one investor, pitch your company to one investor, which you're going to be merging with, then pitching your company to a group of investors during the roadshow process. And that roadshow is also very time consuming. And what happened was, one thing that this article points out that is very, very important is that we are in my opinion, we are in the late stage of a stock market. Maybe not a late stage, but mid to late stage of a of a bubble, of a small bubble. I would say the EV energy bubble and software SaaS bubble that is just going on right now. We're in the mid to late stage, and during the dot-com bubble, it was actually much easier to get your company listed on the stock market through a traditional IPO process. The time frame was very, very short. In this article, I think they talk about here, the dot-com bubble had an incredible turnaround, right? For example, Pest.com launched in November of 1998, went public in February 2000. So basically the time for an average company to go on a roadshow, never mind starting the company, right? Today, in the modern days, it took Pest.com basically the same time to start the company from nothing and went public in February 2000. And that was how quick it was possible to list your company on the NASDAQ. So this actually reminds me of, this is similar to the ICO bubble that we had in 2017, where listing your company, listing your project was extremely easy and the turnaround was extremely quick. But today, through the traditional IPO, it's just not possible to do that. It's going to take more than a year just to list your company, going through the roadshow process. And especially during the COVID era right now, is even more difficult to do that. So that's why there are SPACs are the new way to fast track your company to IPO. So the company here, basically what the company is going to lose is that the SPAC, usually the company who merged with SPAC, are raising less money than if they had gone with IPO, because the SPAC you're guaranteed with the funding, right? So you are actually giving a bit of discount to the SPAC, and that is the thing. That is the thing, right? SPAC structure is less risky for the company than IPO, which means that it's riskier for the SPAC, right? For the fund, and which means that SPAC should be compensated by getting an even bigger discount than regular IPO investors. So all these SPACs are, in theory, they should be getting a bigger discount for the company they're merging with, compared to if the company just went on IPO by themselves. And a SPAC could happen very quick. Usually the merging process takes about 3 months, compared to the IPO process of a year and a half, could be even 2 years, and could end up failing, right? Because the market condition changes. So I want to talk about is that right now there are some, I think this is where the money is. This is where the dot-com bubble, kind of similar thing that's gonna happen, that's happening right now, is that I think lots of companies that are kind of undervalued, or they are speculative, they have a high probability of profit and also a high probability of extremely quick valuation boost, are the companies that are going through the SPAC process. And I think that if we look into, a list of SPACs that's happening right now, the list of mergers that's happening right now, we should be able to find some hidden gems and able to take advantage of those. One thing, I was talking about, I already have, is the SPAQ, right? SPAQ, which is they are merging with Fisker. Another SPAC, that has launched last year, was kind of successful. Depends on when you bought it. Was SPCE, right? This was launched by a SPAC deal, and also VTIQ, which now is called Nikola. Depends on where. So SPAC is very risky, right? Depends on where you bought it. Nikola was went up a lot if you bought at a correct spot, right? And right now we have some really hot stocks like SHLL that has gone up a lot. This is also another SPAC play. So there are a lot of gems in this particular arena right now, and I just want to point it out. Okay, and that's all I'm talking about today, and see you next time.